Facebook owner Meta Platforms reported better than expected results for the first quarter of the year after regular trading ended on Wednesday, but its shares slid more than 10% in after hours activity as investors seem to be disappointed with the slight reduction in the company's revenue outlook for the current quarter. I'm Rosemary Miller here with James Demmert, the Chief Investment Officer of Main Street Research, here to tell us more. Thank you so much for joining me today, James.
Thanks, Rosemary. And boy, they blew away the numbers, as far as what people were expecting from earnings and revenue. But this is a case of two things. One is, what have you done for me lately? And then I think with their guidance, which we can talk about, I think that's why the stock is down. They're going to go through some growing pains as they continue to grow, and that's going to confuse investors. So, let's chat about that.
Well, James, on the face of it, Meta had a pretty good quarter, but why is there such a harsh reaction to its data?
Well, again, from the top line of revenue and then profitability on the bottom line, they really beat extremely high expectations. So people would wonder, well, what the heck? Why is the stock down 10% in after hours? And I think this is important. Stocks trade on what has happened recently, but they really trade also on where is the profitability going and going forward. Some of the things that we've parsed out, this is early in the conference call here, but is we've figured out that the guidance is that expenses are going to start to go up. Now, you keep in mind, if you've been following Meta, which I'm sure you have, one of the things that they've had going for them is they reduced costs like crazy back in 2023 and 2022. What they called the land of efficiency, got really skinny on expenses, so they increased their profit margins. Now what they're saying is those expenses are going to start to go up. What's that do? It reduces the profit margins. So that's where investors are getting, sort of concerned, and that's why they're selling off the stock. Now, we think that's a mistake. In fact, we would suggest that the weakness is probably an opportunity for investors.
hmm Well, are investors getting tired of the losses with Meta's Metaverse unit? I mean, Reality Labs. It lost $3.85 billion in the quarter, which wasn't as bad as expected, but still a pretty big number.
Yeah, it is a big number. And I think that they understood that that was an investment that wasn't necessary. And so what they've really done is they've really choked off further investing of significance there. Really what they're going after is what's working. And I really like to see that. And that's why we're shareholders. They are using AI, artificial intelligence, to really enhance and assist their ad sales. And what we've seen in the last 2 quarters, this one included, that they've really done excellent work in investing in AI to really push those ad sales. So ad sales have gone up dramatically. The metaverse is sort of, I think, something that they've sort of put on the back burner, not putting a lot of money there any longer. And we think that's smart. The big problem the stock's having today, after hours being down, is that people think, wow, if the profit margin is going to shrink because expenses are going to go up, maybe sales, will be the same. We think sales will increase this coming quarter, making up the difference for those higher expenses. So I would be careful if I was an investor here thinking, oh, profit margins aren't going to be good, I'll be a seller. I think instead, the stock's down 10%. Now it's trading at 22 times earnings, which frankly is very inexpensive for this kind of business model. And we can also talk about it, if you'd like, while we're in the call, what I call the meta moat. 3.2 billion users, right? Messenger starting to get monetized. And then there's that old TikTok versus Reels. Reels is really coming on board. And if TikTok's banned in the US, that could be really exciting for the company.
Okay, you beat me to it. That was my next question. If the TikTok ban in the US would be a significant booster for Meta.
Yeah, I think, you hear the stocks down. I think a little confused by investors selling here because the margins, I think, will still be good next quarter. And then you've got that, right? It looks like the US is getting closer and closer to banning TikTok, just as Meta is getting Reels to really get a lot of traction. So we think that that's sort of that icing on the cake, if you will, for this next quarter. And I think investors who are selling the stock here may be making a mistake. Again, at a PE of 22, for this kind of growth and this kind of moat that they have, what I call the meta moat, with all those users, I think this is a great company, attractive price.
Mhm. Well, James, is there anything else on your radar regarding Meta that you believe should be on ours?
I think that we have to consider Meta along with all these other companies that are the big AI winners. This is early in the AI tech-led bull market that we envision that will last years. And this is a company that you really want to have in the portfolio. And if you don't own it, this weakness is a great invitation.
Mhm. Well, thank you so much for joining me today, James.
My pleasure, Rosemary.